2025 is coming with a bang, and global markets are in the midst of an intriguing storm. Big opportunities and huge uncertainties. On one side, high inflation is changing everything. On the other, the race for sustainable energy and technological advances are creating opportunities that you can't ignore. But here's a question. How to grow your portfolio to become a winner without exposing yourself to unnecessary risks. In this video, I'll reveal 6 high-growth ETFs that can transform your portfolio. And at the end, I'll share a once-in-a-lifetime opportunity. An ETF that can turn a $10,000 investment into over $50,000 in dividends per year. Stick with me and I'll show you how. First, let's dive into what ETFs are and why they're poised to make waves in 2025. Think of ETFs as perfectly packaged investment packages. Not only are they cost-effective thanks to their low fees, but they're also a hassle-free way to diversify your portfolio. Instead of putting all your money into a single stock, you're spreading it across multiple options, which significantly reduces your risk. Here's the kicker. ETFs also allow you to tap into booming sectors like renewable energy or cutting-edge technology without having to be a financial whiz. I've carefully ranked the top-performing ETFs for 2025 in order from good to best, starting with number 6 and working my way up to the top 1. These picks are based on their potential to turbocharge your portfolio. Let's start with number 6, the Schwab US Dividend Equity ETF, known by the ticker symbol SCHD. This ETF is a top-rated choice for those seeking a reliable mix of stability, growth, and income. Unlike high-risk leveraged ETFs, SCHD is all about consistent, reliable performance, perfect for investors focused on the long term. SCHD tracks the Dow Jones U.S. Dividend 100 Index, highlighting 100 high-dividend-paying U.S. companies with solid financials. These are not speculative plays. They are established companies with proven records of profitability and resilience. SCHD stands out for its notable features, including a dividend yield of around 3.39%, offering a steady income stream. What's even better? It prioritizes companies that consistently increase their dividends, creating the potential for increasing payouts over time. With an impressively low expense ratio of just 0.06%, SCHD offers cost-effective exposure to high-quality dividend stocks. Its diversified portfolio spans sectors such as technology, consumer staples, and financials, minimizing risks tied to any single sector. Let's talk numbers. SCHD's dividend yield is matched by a dividend growth rate of 11.13% and an average annual share price appreciation of 7.95%. If you invested $110,000 at the beginning, your portfolio would grow to $1,134 after 1 year. A steady and promising start. Fast forward a decade, and your investment triples to $3,695. By year 20, it jumps to $17,730, and by year 30, it skyrockets to a whopping $433,500. The cherry on top. By year 30, annual dividends rise to $3,247, or about $2,671 monthly, providing a reliable income stream. Next, we will explore SPGP, the growth ticker, at a reasonable price ETF. This one is all about finding the balance between companies that are growing their profits and those that aren't overly overvalued. In 2025, with market volatility increasing, investors are leaning toward companies with solid fundamentals over overvalued stocks. Packed with companies showing robust profit growth and reasonable valuations, SPGP is a smart play for a stable portfolio. Imagine owning a piece of the future, a tech company that's redefining innovation while maintaining rock-solid finances, or a healthcare giant that delivers life-saving treatments without burning cash. That's exactly the kind of hidden gem this ETF is after. Pay attention here. What makes this ETF stand out is its balance. It's not heavily tied to any single sector, like tech or healthcare. Instead, it spreads your investment across a diversified portfolio that's built to handle the market's ups and downs. Whether the bulls are charging or the bears are snarling, this ETF keeps you in a strong position. Let's break it down. SPGP boasts a current dividend yield of 1.31%, combined with robust dividend growth of 11.27% and impressive share price appreciation of 12.89%. Starting with an initial investment of $10,000, SPGP offers an attractive mix of growth and income. After just 1 year, you would see your investment grow to $1,420. Fast forward a decade, and your portfolio grows to $37,742. At the 20-year mark, it jumps to $137,800, with the true magic of compounding kicking in through reinvested dividends. Over 30 years, the portfolio could reach $576,000, paying out annual dividends of $3,592, a total value of $458,500 of capital growth and $32,476 of reinvested dividends. Next up at number 4 on our list, we have First Trust Nasdaq Clean Edge Smart Grid Infrastructure Index Fund ETF, better known as GRID. This ETF focuses on companies that are reshaping how we generate, store, and consume energy. Think smart grids, renewable energy, and electrification. Here's the reality. Electricity powers our lives, from smartphones to electric vehicles to AI-powered smart homes, and that dependence is only growing. In 2025, as nations double down on their green policies and sustainability, GRID is at the forefront of this shift. And it's not just about ethics. Clean energy is big business. Governments and corporations are funneling billions into green energy, creating lucrative opportunities for the companies within this ETF. With a 1.08% dividend yield, 8.98% dividend growth, and a 13.33% annual share price increase, GRID delivers. A $10,000 investment could grow to $14,441 in year 1. By year 10, your portfolio reaches $37,798. In 20 years, it's worth $138,988, and after 30 years, an impressive $514,439, thanks to the compounding power of reinvested dividends. Stay tuned, because at the end, I'll share a once-in-a-lifetime opportunity. An ETF better than GRID that can turn a $10,000 investment into over $50,000 in dividends per year. Third on today's list is iShares U.S. Broker-Dealers and Securities Exchanges ETF, IAI. This ETF is all about powerful companies that dominate the trading, brokerage, and securities landscape. Think titans like Goldman Sachs, Charles Schwab, and Nasdaq, names that thrive when the markets are full of action. But what makes this ETF a standout pick for 2025? Let's break it down. The financial world is changing at lightning speed. Trading volumes are soaring, fintech is experiencing explosive growth, and everyday retail investors are playing a more significant role than ever before. Events like the GameStop frenzy have proven that the power of individual investors is no longer a side note, it's a game changer. This ETF is perfectly positioned to capitalize on these evolving market dynamics. What sets this ETF apart is its unique balance of legacy giants and forward-thinking disruptors. On one side, you have stalwarts like Morgan Stanley, masters at navigating economic turbulence. On the other, cutting-edge platforms like Nasdaq are redefining how trading is done. This mix of stability and innovation offers a winning combination for long-term growth. Now, let's talk numbers. With a dividend yield of 1.02%, dividend growth of 11.87%, and share price appreciation of 13.81%, this ETF is designed to deliver. Starting with a $10,000 investment, you would see your portfolio grow to $1,483 in just 1 year. By year 10, that investment grows to $39,586, and in 20 years, it reaches an impressive $154,300. Fast forward to 30 years, and your portfolio inflates to $594,500, generating annual dividends of $3,004. That's a total growth of $584,500, including $557,000 in capital appreciation and $26,600 from reinvested dividends. But before we reveal the final ETF, the one that could add a cool million to your portfolio, let's talk about the runner-up, the Global X MSCI Argentina ETF, ticker ARGT. This ETF is like a golden ticket to one of the most intriguing emerging markets in the world. Why Argentina? The answer is simple: opportunity. Yes, the country has faced its fair share of economic turmoil. Okay, maybe more than its fair share, but that's exactly what makes it such an exciting and potentially lucrative investment. ARGT focuses on key sectors like agriculture, energy, banking, and technology. Think of companies like Mercado Libre, the Amazon of Latin America, or YPF, Argentina's leading energy supplier. These are big players driving growth in an underexplored market. While well-known emerging markets like China and India dominate the conversation, Argentina offers a less crowded and highly promising alternative. Of course, higher potential returns come with some risk, but for those willing to ride the wave, the rewards can be significant. Now for the stats. With a dividend yield of 0.97%, dividend growth of 15.24%, and share price appreciation of 14.06%, ARGT has a solid foundation. A $10,000 investment grows to $1,003 in year 1, and by year 10, it reaches $47,438. After 20 years, the portfolio reaches $167,800, and with dividends reinvested, it grows to $741,300 by year 30, paying annual dividends of approximately $827. That's a total growth of $690,145, including $57,200 from reinvested dividends. And finally, claiming the top spot on our list is the ProShares Ultra Dow 30 ETF, with the symbol DDM. If you're someone who loves the idea of investing in reliable, blue-chip companies but would like to take your returns to the next level, this ETF might be just what you're looking for. Here's why. DDM is built to deliver twice the daily performance of the Dow Jones Industrial Average. Simply put, if the Dow goes up 1%, this ETF goes up 2%. So why does this matter for 2025? The Dow Jones is home to some of the most robust, time-tested companies on the planet. Think Apple, Microsoft, Coca-Cola, the kinds of industry giants that not only survive economic challenges, but emerge even stronger. With DDM, you're essentially doubling down on these stable heavyweights without the hassle of a complicated investment strategy. Now, you might be thinking, doesn't doubling the returns also double the risk? Kind of, but here's the twist. Because the Dow is not a volatile technology index, but rather a collection of mature, financially secure companies, the risks are relatively contained. You're leveraging your investment, but on a basis that is known for its resilience and stability. Let's talk performance. This ETF boasts a current dividend yield of 0.98%, combined with impressive fundamentals like a 21.43% increase in dividends and a 16.5% increase in share value. Starting with $10,000, your investment could grow to $17,480 in just 1 year. Fast forward a decade, and that portfolio jumps to $51,146. In 20 years, it skyrockets to $278,900, and after 30 years, it could reach an impressive $1,686,182. Even better, the dividends keep growing, paying out $55,500 annually through year 30. That total growth includes $1,451,174 in capital gains and $271,600 in reinvested dividends. Now, if you want to know which is the best fund that, when you invest your money, turns into millions of dollars, click on the video on the screen.